Hi, Michael here. In today's video I will talk about filtering entries using Thomas DeMark oscillators, exactly the TDREI, propulsion and sequential. So if you don't know who Thomas DeMark is, well, he is the founder and CEO of DeMark Analytics LLC, creator of the DeMark indicators, and he has been a special consultant to Stephen A. Cohen of .72 asset management for over 24 years. So we can say he's a pretty smart dude. We'll start from explaining what is the major problem of all oscillators. So the main problem that DeMark sees in the use of oscillators is that average traders exaggerate the value of the divergence of the indicator with the price position. As a rule, people who do not understand how an indicator works and based on what principle it alternates do not care what the composition and the recommended interpretation of this indicator might be. They try to interpret its vague signals that aren't basically signals and must be confirmed by other indicators. A good example is a famous indicator RSI. In May, this indicator showed a bearish divergence in the daily time frame. And according to all rules, the trend should have reversed and the price should have started declining. According to DeMark, the main problem in interpreting such signals is that users do not take into account the time that the indicator is in the overbought and oversold stages. DeMark notes that if the indicator is in the overbought and or oversold zone for more than 6 bars, which is for this example 6 days, this indicates the strength of the trend, which means that this signal is false. It is clear from the chart that the two overbought zones lasted for more than 6 bars, which indicates the trend's strength, and so the oscillator's correction in these cases will be false sell entry signals. So the number of bars may be different for other oscillators. Everything depends on the indicator's parameters and the peculiarities of its composition. Therefore, in each particular case, for each time frame, one should perform an own analysis of the number of bars in the overbought and oversold zones. To facilitate the analysis of all parameters, DeMark developed his own series of oscillators that I will describe in a second. So okay, first I'd like to talk about the TDREI, or Range Expansion Index. This indicator is designed to filter out false signals when the price is trading in the range or in a strong trend. It should send a reversal signal only if the market sentiment really changes. So you see the TDREI indicator in the chart at its bottom. The TDREI oscillator typically produces values of minus 100 to plus 100, with 45 or higher indicating overbought conditions and minus 45 or lower indicating oversold. Besides, the TDREI counts the number of bars, and if the price is in the overbought or oversold area for more than 6 bars, the indicator shows this and indicates a strong trend. On the other hand, this indicator is more responsive to the price changes, and while the RSI is still in the overbought area or in the neutral area, the TDREI has already a few times entered an oversold area, thus sending a buy signal. In this chart you will see all buy signals on the indicator are marked by circles and by green flags on the price chart. So it stands to reason that this indicator is much more complicated than it may seem. Based on this example, it also has many peculiarities which I will describe in a moment. So first, let's run down its mathematical model, so that you can understand the indicator's signal. Okay, so the TDREI value is calculated by adding the respective differences between the current day's high and the high 2 days earlier, and the current day's low and the low 2 days earlier. So, to make it clear, the calculation formula looks like this, where H is the current high, H2 is the high 2 days earlier. L is the current low and L2 is the low 2 days earlier. Besides, two conditions must be met. Condition 1, the current day's high must be greater than or equal to the low 5 or 6 days ago. Or the high 2 days earlier must be greater than or equal to the close 7 or 8 days ago. Condition 2, the current day's low must be less than or equal to the high 5 or 6 days ago, or the low 2 days earlier must be less than or equal to the close 7 or 8 days ago. If neither of the conditions is met, a zero value is assigned to that bar's day. If both conditions are met, then there will be a different formula, which you see on the screen right now. So, where the y equals the sum x1, next x5, then h5 is the high over a 5-day period, L5 is the low over a 5-day period. Differently put, TDREI kind of shows the price movement adjusted to a trading range over 5 days. So okay, let's move on and check how we can filter signals using REI. Like any other indicator, TDREI is not a holy grail and sends false signals too. To filter out these signals, Thomas DeMark suggests using the TDPOQ indicator, the price oscillator qualifier. But to be fair, I must note that this indicator can be used together with any oscillator based on the price action, for example MACD or RSI. So the TDPOQ conditions to validate the TDREI signals. So first the buy signal, and number one condition, the TDREI has been in the oversold condition below -40 for 6 or more bars. Second, the last complete bar should close below than the previous bar. Third, the current bars open should be equal or lower than the highs of the previous 2 bars. Fourth, the market should be trading above the open price and break through the high over the last 2 days. Next, for sell signal, and number one condition, the TDPOQ has stayed in the overbought conditions, which is above 40 for 6 or more bars. The second, the last complete bar should close higher than the previous bar's close. Third, the current bars open should be equal or higher than the low for over the last 2 days. Fourth, the market should be trading lower than the opening price and break through the low of the last 2 bars. So to explain how you can use the TDPOQ to filter the entries, I'll describe the examples of a buy and sell signal. So first, buy signal, and it is clear from the chart that the first condition is satisfied. The price has been in the oversold area for more than 6 bars. Second, the last complete bar closed lower than the previous bar's close, which is the green dots below the red ones in the chart. And third, the current bars open lower than the highs of the 2 previous bars. The current opening price is the same as previous bar's close. It is marked with green dots. And it is lower than the 2 yellow dotted lines. Fourth, when the price breaks through the highs of the last 2 bars, there is a buy signal. It is marked with the red cross. So as you can see from the chart, there is a reliable early signal to enter a trade. I must note that the TDREI is a good supplementary tool for other Thomas DeMark indicators. It is clear from the above chart that the signal perfectly matches to the start of a bullish set, indicated by the TD sequential on the 5-day time frame. But it also matches on the shorter time frames. Now let's jump to sell signals and let's analyze them based on the BTC chart. First, I'd like to note that the TDREI indicator starting from the 8,000 USD recorded on November 20th, 2017 in the BTC price chart was in the overbought condition for more than 30 bars and has never sent a false signal. In my opinion, this fact alone is the evidence of the TDREI efficiency. Now let us analyze the signal produced on December 19th. As I already said, that the indicator has been in the overbought zone for more than 6 bars before the signal emerged. Now let us analyze the signal produced on December 19th. As I already said, that the indicator has been in the overbought zone for more than 6 bars before the signal emerged. We can put a check on that. The last candlestick closed as a doji. The closing price is almost equal to the previous bar's close. This condition is not fully met. So we need an additional confirming signal. In the above chart, you see that the current bar of December 19th opens lower than the high of the previous 2 days, so we also put a check. The market broke through the lows of the previous 2 bars and it's trading lower. I mark the breakout with the red cross. Therefore, as there is not a fully confirmed signal, it is important to employ this indicator with other Thomas DeMark tools, for example with the TD propulsion. So the TD propulsion up target level for the bullish trend at the level of $18,286. If you attach it for another chart and add the calculation of the TD sequential indicator, we shall see that this very bar closes lower than the TD propulsion up target level. And at the same level, a bearish setup starts, based on the TD countdown indicator. So both these signals are confirming signals and finally suggest sell trades. So from the Thomas DeMark's indicator, only DeMarker is installed by default on MT5 platform. The rest of them you need to search on the web. Those examples were made on the TradingView platform and you can find them over there. Or on the MQL community if you are using MetaTrader. So this is all from my side for this video. Thanks for watching and subscribe for more.